And to talk about some of the market action, we're going to jump over to our man Steve Rhodes like we do every Monday at 3:15 p.m. Eastern Time, folks. You can check out Steve's outstanding program, folks, The Trader's Edge, every market day, 11 a.m. live right here on Tiger TV. And right on the front page, folks, you hit that newsletter tab, Mastering Probability. Subscribe to Steve's newsletter. Check it out. It comes with a 30-day money-back guarantee, folks. You can click that button, sign up for $149. You get it for 30 days, money-back guarantee, and you get some awesome webinars. And you get Steve in there every morning, afternoon updates, weekend updates. It's great stuff. Steve Rhodes, good afternoon.
Tommy, great to be with you. How are you today?
I'm doing great, man. It's a beautiful day in St. Petersburg, Florida. The sun is shining, and yeah, so it's going well.
I'll tell you where it was beautiful in Atlanta this weekend, Saturday night. Now, of course, we've been dealing with the heat for months here, and the original forecast when it went up there was supposed to be raining. We didn't get any rain, which was great. Saturday night at about 9-10 o'clock at night, we're all sitting outside, like 70-degree weather, clear skies, no bugs. It was beautiful. I said, where am I going to get this? Not until maybe January.
It's beautiful, but I was sweating today, Steve. I was running around to some houses in St. Pete. It is hot, man. I hear you. Give me some of that cool air.
Yeah. Well, another place that's hot is the gold market. So I thought we would talk about gold today. I'd share a few charts with you and our listeners out here. And the first one that we've got up is so I have 50. So this chart here is the seasonal chart for gold provided by the folks at SeasonX. Really great tools that they provide. Makes it easy for those folks that want to understand what the seasonal type averages are. So this is 57 years worth of data. The bottom panel shows you by month, top performing months, poor performing months. And if we take a look at it right now, that red vertical line, by the way, that's exactly where we're at today. And what we can see here is really the favorable seasonal cycle starts in July and really runs all the way through February. Then we get a bit of a move to the downside in March and June. So that's just a normal 57-year seasonal cycle. Now, what's the conclusion that we can draw from this? Well, the conclusion I would draw is that gold really should still be in a subtrend, and if it's going to follow along this cycle, would rally into the end of the year. The other option that we're taking a look at is how has gold behaved during post-election years. And that's what so that took the exact same data that we just looked at and then took a look at the post-election years. And we can see here that it's much more of a choppier ride out there. In fact, I would say, now we're sort of near, now what's interesting about this is this suggests that we should see a bottom in just a couple of days out here. Again, the red vertical line, Tommy, is where we're at.
Okay.
And, but it looks like a much choppier type of a market, or more of almost a consolidation, a sideways consolidation that is out there. So those are the two patterns to take a look at. Let's try to investigate this further. First, what's going on in the market? When I take a look at the daily and the weekly time frame charts, you can see I've drawn in a consolidation pattern. So we just talked about the fact that maybe this is more of a consolidation-oriented pattern out here. That's what gold is really trading in as we speak right now. And the interesting thing here is we do have tops for gold for the type of the patterns that I use, tops for gold for its daily, weekly, and monthly time frame. On the daily time frame, it's a Rhodes Momentum Indicator top. Again, that's led to this consolidation sideways. On the weekly chart, it's a TD9 count top, and on the monthly chart, it's a TD9 count top out here. So we had on Friday, what took place is price ran right up into the top of the consolidation pattern and since backed off. Kind of interesting, huh?
Yeah, right.
Gold is testing. If somebody's come down and take a look at the daily profile, the daily chart out here. So we've got gold that tested the top of the consolidation pattern. And now this was a snapshot from maybe about a half an hour, 40 minutes ago. Price was testing the bottom of its daily profile. And the bottom of its daily profile is 34.1410. If at today's close, price closes below that, what it does is increase the odds of price moving back towards the 33.76 level, 33.38, or maybe even back to the bottom of the consolidation. What looks like is going on to me is that today is day number one of a retracement. And if you look at the bottom panel of the chart here, it shows us consecutive days up and consecutive days down. We take a look at consecutive days down. They typically are 2-day knee-jerk reaction lows, 3-day knee-jerk reaction lows, and on occasion we get a 4-day. The most recent one that we had was basically a 4-day move to the downside and price move to the upside. So that's what I would expect, is that if we get a close below 34.1410, is that would signal to us at least that 2 to 4 day retracement and likely finding support at one of those either profile levels or at the bottom of the consolidation. This is gold's monthly chart. And if we go back, and what I've done on this, you're going to see about 4 charts, and it's going to decorate basically this chart here, or this blank chart. Now, this is a long-term chart, monthly time frame. Goes back to when, back in 1998, when gold was at $253. That's our A point. The B point was at, now this is a continuous contract, by the way. The B point about 1923, a 52% retracement. And you can see that we are now above the 1 to 1.272 A to B expansion level. For me, once we get to the 1-to-1 area, anytime we get there, what I look for is a bearish reversal candle to confirm that we've got a top out there. So it's the sellers signaling to us that they're ready to try to take action. Bless you. And so unless we get a bearish reversal candle, the monthly chart is suggesting that gold wants to make a move up to the 37.48 level. That would be the 1 to 1.618 A to B equals CD pattern. If we add rising price channels to this, and we start with the rising price channel along the lows out here, we can see that we've just entered what could be a new rising price channel. Once you break through one, and what we've done here is we broke through it 4 months ago, and then we spent the last, or 5 months ago, we spent the last 3 to 4 months testing that rising price channel line. So it's been tested, it's been rejected, we're in a new price channel, and if gold is going to continue to move higher, again, this is adding to the idea of getting to the 37.48 level. We also have horizontal trading range boundary lines, and these are and you can see off to the right-hand side, you've got both the number of a price point as well as how often we've had price stop at that area. For example, down at 1312, we've had 35 opens or closes on a monthly basis at that level. Here we can see that prices trade above both that rising price channel as well as this 33.61 level. It's possible, Tommy, that on a pullback, that 33.61 could be that level of support, or maybe it's just down right at the top of that rising price channel one more time. So the monthly close above, by the way, monthly close above... no, nothing else for me to say there. I also wanted to take a look at how gold was trading in other currencies out here. And these are the Middle Eastern currencies. And what's kind of interesting is when gold was testing the top of its consolidation in terms of U.S. dollars, it was testing its all-time highs in almost every major Middle Eastern currency. The point to take here is that price was hitting resistance, not just in U.S. dollars, but price was hitting resistance in these countries for their currencies. If I take a look at what's going on with regard to gold priced in other major currencies like the euro, like the yen, like the pound, what we have out here is gold priced in pounds, the Canadian loonie, the Swedish krona, and the Chinese yuan, each tested and rejected the low of their all-time high swing point out there. So again, resistance was hit, and this sets up that idea of a 2 to 4 day pullback inside of gold. So that's what I see when we take Goldilocks out there. Just a sideways consolidation, and those things can be painful.
Well, especially when gold just goes up, Steve, right? Isn't that? No, great analysis, man. I love the way you walk through it. And
if you look at the monthly chart, on the very right, you can see just sideways action.
I know.
There,
and
right?
you know what's amazing too, Steve, is when you talk about that consolidation, we just completed a 1-to-1 A to B, C to D, exactly off those February of 2024 runs, which is that consolidation too, which would make sense. You get a little pullback to add into the mix. Steve, great analysis, man. You do such a great job. I always appreciate the education. We look forward to the program tomorrow at 11, and have a great day, man.
Take care, Tommy.
Take care. We'll be right back, folks.